Hi everyone, this is Sam Wong from Finance and Analytics Services team. Hope you had a great weekend. Just trying to give you a quick recap of the market from last week. And as you can see in the graph on Nasdaq, and it was down 4.15% last week. The market was still sluggish in the week of April. And all three indices were down last week. War continued to drag on with dozens of people have been killed and injured after two missiles struck a train station being used as an evacuation hub in the eastern city. Investors are beefing a sign of relief after regulators in Beijing extended an olive branch to the United States. The Tesla chief revealed a 9% stake in Twitter on Monday, sending share of social media platform surging 27%. Market will focus, which last week were on interest rate invert, inflation, and war. What does that mean? Interest rate invert? It's really not a good thing. A yield curve inverts when the long-term interest rate drop below short-term rate because investors expect short-term rate to decline in the future, and typically it's a result of impaired economic performance, like really associated with a recession. So right now, the stock market, if you look in the month of March, was very sluggish and down. At the worst part, Nasdaq was down almost like 16% or so. But then, the market rebound kind of in the last week of March and early April, first couple of days of April. So it wasn't as bad. But then this week again, it's lost another 4% ground again for Nasdaq, and it's just because of the prospect, which is pretty much bad news, but kind of expected. The market has yet to absorb an investor and determine whether it will be recession or not, which is this interest rate invert. And also Fed was kind of indicating that potential will accelerate the rate of raising interest, which is, will be 0.5% coming forward in May. And also the $9 billion of the balance sheet that untouched, which at some point have to find ways to stop, kind of really get rid of these bad balance sheet numbers. So these were kind of causing the market to slip, and really in reality, we're really waiting for catalysts, right? If any good news like the third week of March, then you may drive some rebound, and also, the earnings season already started. This week is coming, and bank will be first one up on the line to reporting earnings. So again, keep going on for Tuesday. JetBlue May. These are the key highlighted news. May and solicited $3.6 billion offered to buy the company. The bid could derail a proposed deal between Spirit and Frontier Airlines announced earlier this year. On the East Coast, thunderstorm pushed back dozens of flights on Thursday. More delay expected during the weekend. Not sure if that's related to the delay, but then airline stock was sleep as well last week. Pfizer was the one best performing stock in the United States on Thursday after it announced it was buying Revaro. Aging has been a problem for the world, as you know. I mean, people start to get older, the populations. So now U.S. come up with this, a sweeping U.S. Postal Service reform bill that will overhaul the agency finance and allow it to modernize the service was signed into law yesterday by Biden. The new law will require retired postal employees to enroll in Medicare where eligible and repeals previous mandate that force it to cover healthcare costs upfront and years in advance. Those two measures will save the USPS nearly $50 billion over the next decade. So again, U.S. Postal have been running losses in the past few years. It wasn't new news, so part of it is because they will actually have a pretty good medical and pensions for those people who servicing the postal service. So right now, this reform will kind of reduce costs for them. Again, U.S. Postal is government owned, and actually every year price have been going up with stamp. You've noticed, but still they actually operate in a loss. So, on the news of COVID development, Fauci emphasized that there's a be a waning of immunity and that we should expect to see an increase in case when the colder weather arrives in the fall. This week, the coronavirus has also been hitting a string of D.C. lawmakers. House Speaker Nancy Pelosi is test positive for COVID-19, a spokesman for the California Democrats said yesterday. Two members of Biden cabinet also test positive for COVID-19 Wednesday, but the White House said the president tested negative. So I hope that's the right true. But anyway, we haven't seen Biden, so I'm so sure he's in the safe place. Make sure he's not getting himself into COVID. JP Morgan. So the coming week, JP Morgan Chase, Wells Fargo, Citibank, Goldman Sachs, and Morgan Stanley will all report first quarter earnings. Asset management giant BlackRock and State Street also will be reporting how well they're doing with Vanguard and BNC online lender financial, and also going to release the latest financial. How do things look like right now with what is going on? Deutsche Bank is the first major bank to forecast a U.S. recession that will begin late next year. The Federal Reserve fight against raising interest rates and aggressively tightening monetary policy will push the economy into a recession. Unemployment, for example, is expected to peak at 5% in 2024, but reach far higher level of 14.7% in 2020 and 60% in 2009 during Great Recession. So recently announced 3.8% unemployment rate, but it projected to be higher than where it is right now. Raising interest and high interest rate may lead to U.S. recession. The cost of pandemic may also change consumer behavior as we continue to move to a new normal, says CFRA bank analyst Kenneth Leon in an earnings preview report. Inflation get worse before getting better. Also, this week we'll have a consumer price index released Tuesday morning. Economists are forecasting the CPI number will show price growth at 8.3% clip over the past 12 months, which is the highest in average 40 years of history. But anyway, 8.3% everybody knows is kind of underrated because it should be higher than that. If you go to the grocery to buy something, it's going to be already raised more than 10%. You look at bread, how much it costs you. Look at oils, right? Everything is cost more than 8% wherever you stay. So, but then I guess the messaging of this is really saying inflation need to be really make Americans' life worse off. And, despite whatever they're saying, is meaning they also have really a lot of money on the side that's strong to continue to consume and buy things on the market. I think it's just because people seeing things are getting more expensive, so they go out to buy things they can store a longer time. So then you to combat the inflation. And also, the research that coming out from Biden making the oil price drop below $100. We'll see if it's sustainable or not. So anyway, we're facing all these challenges, and the Producer Price Index, which measures prices for raw goods sold to business, surged 10% as 12 months ending in February. U.S. retail sales, U.S. consumer sentiment, earnings from Taiwan Semiconductor, United Health, Ericsson will also be released this week. A lot of moving parts. So the future of major index is negative right now, which actually pretty huge too when I look at it. So we're starting earnings season again. I hope there was some positive surprise to roll the market. And honestly, if you ask me the bank earning, I think they will still continue earning pretty good. But then they also will have a cautionary statement, probably saying the inflation will drive, and the raising interest rate will reduce the consumer desire to borrow and business financing activity. So that may actually, if they do say that, then that actually may cause the market look at it, more negative and not going down. So sometimes you're really surprising, even despite reporting a strong and very strong earnings with both top line and bottom line beating the estimate, the market is still not rewarding, but actually looking at it negatively, because the market again is a forward-looking instrument. So if they think the market, inflation will continue, interest rate rising is not a good thing, and yet it's not going to combat inflation either, and then earnings actually will be lower for the next, forward next 2 years, then the market may actually going down. And the growth stock particularly will be hard hit for that, because right now the yield curve are already over 2.2%. So I have all this news again. There's no good news right now, but if you go back to the third week of March, where some positive news that kind of as a catalyst drive the market, rebounded 5%. I hope that will happen again with this driving earnings season, so that you will at least bounce back 10% plus. A lot of time, again, it's the confidence of investors, so also momentum, and also there will actually still money on the side, but whether people actually put it somewhere else versus the stock market, that's the questions. Hope all of you have a nice and wonderful week.